All right, so I'm Lindsay Labonte, branch manager here at our applied mortgage team of HomeRUN Mortgage, and I am joined with my colleague, loan officer Bob Petrelli. How's it going, Bobby?
I'm doing well, thank you.
Oh, do you have sound? I can't. Try that again.
Can you hear me?
I can hear you now. My computer
Perfect.
was muted, so there you go.
I'm doing well, thank you. I hope everybody here is doing well as also. So
Better than I am with my mute on. So we've got this awesome new program, our HomeRUN cash offer program. I think it's going to be a huge tool to use this spring, as we all know, with low inventory, high demand. If rates come down, that's just going to cause more demand. So we'll see what happens there. But Bobby, can you just give me an overview of what this program is?
Yeah, absolutely. So it is a cash offer program. I like to call it a service because it's not really a program. So we allow buyers to make cash backed offers to compete with not just all cash buyers, but other, mortgaged buyers. So basically it's an optional paid service that allows prospective buyers to make that cash offer. There is a charge of $499, but it's only due at closing and only if they use the program itself. So getting registered and set up for the service does not cost them any money. And it removes their key contingencies. And to the seller, what's so powerful about it is we're going to guarantee the purchase will close. So there's a few basic parameters. We do a fully underwritten pre-approval, which means that we take all the information from the buyer, just like they have a real property, and we underwrite them fully. That's how we know that they're rock solid and we don't have anything to worry about. They do need to put a minimum 5% EMD, which I think is pretty, basic in this market anyways. The purchase cannot be contingent on a sale of a home. It has to, well, it can be a primary residence, second home, or investment, but it has to be an existing single family, which means like no new construction. We need a purchase history with that property, or it can be a 2 to 4 unit condo. And the purchase price at this time cannot exceed $1 million. There's a few, go ahead.
Oh, I'm going to interrupt you. So I'm a buyer. So I'm in this market and I hear about this cashback program through my realtor or whatever. And I call you and I'm like, all right, I just want to figure out a way to be competitive in this market. Can you we got kind of the overview of what it can be used for. I know you were just going to talk about what it can't be used for when I interrupted you. But can you just kind of walk me through as a buyer, like what would my first step be? What would that first conversation look like when I talk to you about whether this program might work for me?
Absolutely. So I plant the seed with them to let them know that it's around, basically during our initial conversation. So I'd basically be letting you know, we're going to go through the pre-approval process, and we do have a cool process once you're, ready for it, that we could potentially back your offer with cash. And it depends upon certain parameters as you as a buyer, as well as what properties you're looking at. So I like to plant the seed up front just so that they know that it's there. We all know first-time buyers, we've dealt with them a lot, right? So they're new to this whole thing. Things are overwhelming. So we don't want to overwhelm people with it. And this is a kind of a new, different level as far as, okay, you're going to be waiving contingencies. Like, what does that mean? And it can be overwhelming. So we just, softly go into it. Then we fully underwrite you. And we're going to make sure that you don't have any potential red flags, right? And as long as you fit into it, then we start the conversation, going forward. So once we've gone through that pre-approval process, I'm going to say, Lindsay, once you're ready for it, we have, just reminding you, we have this program. This will probably be second, third conversation. If nothing else, I recommend that you get set up for it. And so it's a great tool to have in your toolbox. And if we don't want to use it, then we don't want to use it, and that's fine. And it's probably, if somebody's ready, some buyers are ready to just jump right into it. But we know most of them have to go through making an offer, seeing how competitive it is, and all that. So that's the basic lead into it. Does that answer your question?
Yeah, so we would do a fully underwritten pre-approval. So I guess that's kind of the key difference, is that Normally buyers, they talk to a lender, they get pre-approved, which really just kind of means the lenders looked at their information. We do that anyway. Then there's sort of this like second leg up that you're talking about, which is a fully underwritten pre-approval, which means that the customer and their credit and their financials are actually pre-screened by our underwriting team. So that can happen regardless of whether they're using this cash back program, but it enables them to be able to use it if they want to. So I think that's a really cool distinction that you made, is that from there, they can then pick and choose depending on the property, depending on the situation, if they then want to exercise this additional service of having the cashback portion or cashback service added into their offer.
Exactly. And that fully underwritten pre-approval, as we know, is on its own is just a stronger bargaining position anyways.
Right.
And a key to it is there is a time lapse. Like, you have to submit the pre-approval, it has to be underwritten, all that stuff. So it's not, for a regular pre-approval, somebody can call us and we can get it to them within an hour or two in a lot of situations, right? The fully underwritten doesn't work that way, which is why I always try to tell people, if you're eligible for this program, even if you're not ready for it, let's get it set up. Let's do that fully underwritten pre-approval so that you're not calling me on Saturday and saying, oh, I want to make an offer on this property using that cash program, but you haven't done anything with it yet.
All right. So needs a little more prep time too. Okay, yeah. Perfect. That all makes sense. So, and then you were talking about who it does apply for. You want to just go back a slide since I interrupted you? I'm really good at interrupting people. So when we're talking to people and we're figuring out what loan programs may be available, then we would be able to decipher whether this service may be an opportunity for them based on, do they fall into these basic parameters, Bobby, that you went through? And then from there, what would exclude them was where you were headed.
Yeah. So some of the exclusions would be certain condominiums, like if it's more than 4 units, they're not eligible. And what you'll notice is most of these things are things that we can't ascertain in advance whether or not the property or the borrower will be able to, complete the transaction. So foreclosures and short sales is something that we can't do. New constructions and pre-sales we can't do because there's no prior sales data. One of the things you'll see we'll do is we have to put the property through a valuation model. Multifamilies right now do not work. And then any property that just doesn't meet Fannie Mae property standards. So you can't come to us on like a property that's like 203K or rehab only. It has to be something that can be, occupied right away and pass those minimum standards. And that takes us to, we can't do FHA or VA loans on these either because they have more strict appraisal requirements from a condition standpoint. And then one of the big ones potentially in this market, because sellers have so much power and everything, is a lot of sellers right now are looking for lease backs. We can't do a lease back on this because we have to look at it from a worst case scenario. If we end up having to step in and buy the property, that's our guaranteed close. Then we don't want to be a landlord. So there's just no lease.
So really it's conventional buyers, single family, primary residence or second home or investment properties up to $1 million. And the customer's got to be comfortable with that 5% down payment deposit. Really is the big piece of the puzzle there.
For sure. And I would say a solid property, like just right. You look at it, it's just a solid property.
Right.
So it's clearly not for everybody, but it's for a large portion of the market.
Yeah.
Sure.
And I think it helps in that meat of the market where, we were just talking as a team, we've got like literally probably hundreds at this point of buyers that have been looking for over the last couple of years even. And if they're in the meat of that market where, well, I was going to say my price range out here in Western Mass, but that's different than yours out in Eastern Mass. Wherever it is, right, there's lots of competition. There's oftentimes cash buyers. This can be the piece of the puzzle that really breaks the ice for them. And speaking of that, can you tell I know you've got a recent success story. Can you just share that before we get into more of like the nitty gritties of how it works?
Yeah, this was a first time buyer. They were very, skittish, like taking their time, rightfully so, up front, feeling out the market. And, they made several offers just the traditional way. But we had this program in our back pocket. And finally, you know, they were like, you know what, we're ready to use it. You know, we are more comfortable with the market. And the first time making an offer with the cashback program, their offer was accepted and they were not the highest offer. The listing agent called me, you know, was very curious about the program because she hadn't seen it before. You know, I explained it to her, and they won the offer, the bidding, without being the highest bid because of this guaranteed close from the sellers.
That's awesome. And I know we've got a wide variety of folks listening in here. We've got some real estate agents, we've got some attorneys. Sometimes we even have accountants, financial planners jump on here, insurance agents. So this is a program that we have established through we're a subsidiary of Harbor One Bank, and it's vetted, of course, by our compliance team and everything. The contracts that go along with the purchase agreement that outline how the cashback is going to work out, if that needs to become engaged, is all available for review by the, of course, buyer, their real estate agent, their attorney when it comes to having their attorney involved. So I did, you know, sometimes people hear, oh, you're just going to buy houses for cash if it doesn't go through. No, that's not the intent or purpose of this program, right? We're not just willy-nilly saying that we're going to back everything by cash. As you can see already, there are certain parameters that the buyer needs to fall into, the property needs to fall into. We're doing our due diligence ahead of time by doing the fully underwritten pre-approval, because when it comes down to it, we want the person to buy the house with the mortgage like they normally would. But if there's an unforeseen circumstance or a delay or something that happens, then it triggers the service to happen and the cash piece, you know, to step in and come into play. But that's something that has been exercised, I think, in the history of the program less than 1% of the time from the last training that we had. So again, this is a great service, like Bobby just said in his example. It works, and we want to make sure that it makes sense for the people that are utilizing it. So tell us what's next. So how is it that we're able to have a program that will just back an offer with cash?
Sure. So this is the workflow. It seems long, but it's really not. So really all the work is done in this fully underwritten pre-approval stage. So that's why it's good to get it all set up front. And how long that takes is obviously dependent upon the borrower and how complex they are, but it's a regular underwriting process. So once that is taken care of, it's really simple. So we give them, we do the fully underwritten pre-approval. I'm going to fly through these screens because we don't need to read them all, and I want you to understand how fast these things go. So once it's fully pre-approved, we have a website that I literally just put the people in, put the basic information of everything in, and an email comes back to us and the client, just welcome into the program. Takes me 2 minutes to input it, and they get the stuff back. It says typically within 30 minutes, it's really like 3 or 4. And then once you're ready to make an offer, all we need are the property address, how much you're offering, and what the down payment is. And again, it's all automated. It only takes me 1 or 2 minutes to fill out the form, and then it's an automated system, and it usually comes back within like 3 or 4 minutes. What they're doing in the system is they're taking the borrower information and make sure it matches what we've pre-approved them for, and then also it's taking that property and it's running it through an automated valuation model to make sure that what the offer amount is makes sense for the property, and we're not worried about value on it. So there's just a couple of reasons why, but we want to make sure that it's not going to exceed $1 million. One of the valuation things is the bigger the down payment is, the less likely that we're going to need an appraisal gap deposit from the borrower. But, like I said, we want to verify the purchase price amount so that we can then tell the seller, we don't care what the appraisal comes back at. So if somebody's putting a large down payment down, like anything else, if the appraisal came in lower than the offer price, the borrower doesn't need to put any more money into the transaction to complete it. So what we're analyzing is to see if any potential appraisal gap might exist. And if so, we're going to make sure that the borrower has enough money to make up that gap, and we might even ask for some of it up front. So this is where it comes in. When we run a property through, if they're going to ask for additional deposit money, the borrower at that point can decide, okay, yeah, I want to put that initial extra deposit money down to be able to do the cash backed offer, or you know what, I'll just make a regular offer. I don't like the valuation, so I'm not going to use the cash back part. If they don't use the cash back part and their offer is accepted, they don't get charged for, you know, being part of the program or even running that property through. So the appraisal gap is probably the most confusing part of everything. But when you have real examples, it's easy to run them through. We really haven't had much issue with it. Lindsay's run into a couple in Western Mass, like in your smaller towns with, you know, only a few thousand people in it with less houses. Like, you know, it can be harder to get valuations. You know, in the more populous areas, we've had a really lot of success. And one of the things to let everybody know is the recent one that I just talked about as far as the success story, that was only a 5% down borrower, and they offered well above asking price, and we didn't need any additional appraisal gap deposits or anything like that. So
this valuation is just like any other automated valuation model where it's using whatever the algorithm is, right? Just like any of the other algorithms that are using data sets that are available. So this is the key piece where in order for us to be able to present the buyer's cash backed offer and everything to the seller, we've got to make sure that that appraised AVM, the appraised value, comes in where we need it to. And definitely, and so, like Bobby said, in some of the small towns out here, just like when we're trying to get a property inspection waiver, there aren't as many out here in our area, from what it seems, as we kind of go outside of the main towns, just because there's not as many data points for those online algorithms to be accessing. But I have had some with great success that have come in, again, when people have escalation terms in their offer and they're offering well above asking, the automated value has actually been fine. It's been sufficient. So it's just been in like some of the hill towns or where there's really, really low number of house sales happening that gets tricky. But like Bobby said, that's where it's cool. The buyer can decide whether or not it's a program they want to use house by house. So if they decide not to use it on that particular house, and they just make a regular offer, then they're not bound into that extra $499 closing fee. And then whether or not the offer, you know, if the offer doesn't come together and they're making an offer on another house, they can decide whether they want to use it again. So I think that's a pretty cool opportunity as well, that it's if you want it, you use it. If you don't, you don't.
Okay. So I'm going to skip this piece. We basically talked about it. So this is basically what something would look like for you. I don't want to take you through all the numbers, but it really lays out perfectly. So as a realtor, you don't have any guesswork. Like, this is going to come back and it's going to say, based off of offering 500,000, the normal 5% is 275. Is 25,000. So your loan amount is going to be 475. But what we're saying in this scenario is, well, we're only expecting it to come in at 495. So basically, you need to up your deposit to 29,750. So the point to take away from this is simply, we're going to tell you exactly what the situation is going to be. You're going to have no guesswork whatsoever.
And then the customer can decide whether or not they'll get this before the offer, and they can decide whether they're comfortable knowing that they're potentially giving a larger down payment deposit, which is then the risk, right? That deposit, just like any other transaction, is what they're putting forward. So if they don't feel comfortable utilizing the program, then they wouldn't, and they would just make their normal offer.
Exactly. And this is just another example. Like, this is what comes over. So this one's a 475 price. And what it does tell you too, if you have to increase your offers for any reason, it tells you at these different amounts, like what the appraisal gap would be. So you don't, again, it's not like, you know, the seller agents calls you and they're like, well, you know, give us your, you know, final and best. You know, you don't have to be curious as far as like, oh, is this going to include an appraisal gap now? Because if it wouldn't, like these would all be zeros. Or if it does, what is it going to be? So it gives you that information right away. So how you submit your offer once we run these things through. So you just do your normal offer. And then again, if based off of the information that's given back, you're going to put in what your whole deposit's going to be. Maybe it's just 5%, maybe it's more. And then we're going to give you a rider in that email that comes to you. Once we put the information in, you're going to get a rider that you attach to your offer. And that rider is going to be the addendum to the final purchase contract as well. It includes a proof of funds letter, and it includes a cover letter for the seller's agent to be able to read so that it's clear what the program is and what the terms are on it. So contingencies, you can waive your contingencies. You don't have to. Obviously, it's a lot more powerful if you do. If you're trying to make a cash offer with a mortgage contingency, we all know that that's no longer a cash offer, but we don't require anything as part of it. But it only really works if you waive them. So once you're under contract, everything goes as normal. The only difference is we sign the contract addendum as a third party, so that we're that backup buyer should something happen to the regular buyer. We will do an appraisal if it's necessary for the loan program, but the value of that appraisal doesn't matter from the seller side of whether or not it will get accepted. There are times where if the appraisal does come in less than the purchase price, the buyer may need to have, if they're putting 20% down or they're trying to, but the appraisal comes in less, they may now have mortgage insurance, but they'll never be required to put more money in to complete the transaction. And then the closing is just the normal closing if everything goes well, or we step in and close on it. So basically, like I said, give your buyers a competitive advantage. There's no reason for somebody that's eligible for it to not get set up into it, so that it's like we always say, it's a tool in your toolbox. And even if you don't use it, there's no downside to a fully underwritten qualified buyer. So one thing I want to just go back on is because we talked a lot about everything, it can seem like from the agent side, it's a big thing, but this is literally how it goes. We do the fully underwritten pre-approval up front. That's where all the work is. It takes me 2 minutes to put them in our system to, register them for the program. Literally 2 minutes, the email goes to them. Now you're the agent, you have a buyer in the system. You call me or Lindsay and you say, okay, we're making an offer on 123 Main Street. And you just tell us the offer amount and what they're putting down, or we can talk to the buyer about what they're putting down. When we have that information, we put it in our website, and within 2 or 3 minutes, everything comes back to you via email as the agent with the addendum in it for you to attach to your offer. So once they're registered, we can be, talking at, 8 o'clock at night about putting this offer in, or it can be a Saturday, and everything's automated and it's really quick. So for you as the agent, there's really the only difference when you're making an offer is you're going to give us the property address and the offer amount up front. We're going to put it into our website for you, and it's going to spit back the addendum for you to include in it. And it's really as simple as that. I know we talked for 25 minutes about the program, but it's a really quick, easy thing for you as an agent. It's just getting that fully underwritten pre-approval up front. That's where the bulk of the work is.
So all the more reason, I think, to be planning early, it sounds like, and, encouraging people to get pre-approved, talk to us about the program, see whether or not it would make sense for them. And then really it comes down to just like any other mortgage program that's out there, is this the best solution that's going to help meet their needs and meet their goals? And they do have to be willing to understand too that the down payment deposit that they're making, should it, just like any other transaction, right? Should they for whatever reason, be unable to buy the house when all is said and done, then that is what they're risking, because this is essentially taking the place, if they decide, of the mortgage commitment. So that's all things that, of course, we're going to talk to them about. They can talk to their attorney about, their real estate agent about, and decide whether or not they're comfortable doing it. But certainly, in this market, there's a need for programs like these. We have seen them coming up through a variety of different avenues. I think the great thing about this particular program is that it's really low cost, and it's you can choose to use it or not use it, which is great. So there are some restrictions. They've got to be fairly well qualified buyers anyway. And I wouldn't really want it any other way, though, because that's a good chunk of change that they're going to put up. So we definitely want to make sure people are comfortable and understand it. Thanks, Bobby. Anything else that we should know? I think we covered a lot here.
Yeah, we covered a lot. I mean, just, since we fully underwrite them, that their credit's taken care of, their assets taken care of, their income. So the big risk is somebody unexpectedly losing a job, right?
Exactly.
Like that's the biggest one. Because any title issues, that's a seller responsibility, something like that. So it's really just that job loss. And one of the cool features of the program is, the fact that if we do have to step in and buy it, especially in a situation like that, is we hold the property for up to 60 days for that buyer to be able to, get a new job and then requalify for the mortgage and then pass that title back on to them. So, there is some built-in protection, on that front. Whereas if it was a, regular sale and it was after their commitment date, they lose their job. Well, they lose their deposit and the seller moves on to a new buyer. So
Right. This definitely provides extra protection there too. Yeah. Awesome. Well, thanks, Bobby, for the overview. I appreciate it. I'm really excited to be able to talk to folks about this new opportunity. And anybody listening today, just a reminder that we've been doing these webinars. We have every single month first-time homebuyer webinars. So anybody you've got that's thinking about buying a house at any time in the future, first-time homebuyer webinars every month. We have repeat buyer webinars every month as well. These are all on Zoom, super easy to access, recorded. So great reasons to reach out to your database, let them know they can hop on first-time homebuyer webinars or our repeat webinars. And then, of course, we also have for you all today our real estate professional webinars. And we're always looking for new topics. So any questions you have, any ideas you have, we always want to be working together with our real estate partners and just trying to make everybody's experience that much better when it comes to buying, selling, renovating, building, whatever it is with real estate. So thanks for tuning in today, everybody. We will be here again with our next topic coming up in a couple of weeks. So keep an eye on our website and hop on, register, and send us any other topics you'd like us to discuss. We'll see you later.